welcome to the Capital Age, the space for insights on investment banking and deal goals. Our CEO of investment banking, Mr. Yatin Singh, is with me. Thank you for joining, Yatin.
Hi, Prachi.
This year has been, we have seen a flood of deal-making activity in the markets. How do you see the trend continuing over the remainder of the year?
So the first half is a case of two phases from say April to about mid-June, where barely anything happened because that was the time when the tariff turmoil was roiling markets and there was a lot of anxiety. Things started stabilizing June onwards, and then after that, we've had, in fact, September was very busy, the second half of September. As things stand, the momentum should sustain because our SIP flows, which is the bedrock of support, for both secondary and primary markets, they are holding up well. So I don't expect any change in terms of the current situation with primary markets, but again, these things are dynamic. There are some upside risks. We should be able to strike a trade deal with US at some point of time in the second half. So that's clearly an upside risk. Yeah. And also most of the current activity is supported by domestic institutions, right? FIs have been on the sidelines or they participate very selectively. That can change. That can change for good, right? So if that happens, then we can actually get an even better outcome. But as a base case, what has happened in Q2 should roll over to Q3 and Q4 as well. Q1 was lean, as I mentioned.
Correct. In May this year, Financial Express quoted you that companies will reduce issue size to offer more reasonable valuations to the investors. Do you think this approach will woo the investors with smaller issue size? Would work given the markets are seeing turbulences?
Oh, certainly. So I think one of the outcomes of such heavy deal activity is that the buy side is inundated with deal flow, right? And they don't have enough bandwidth to process every new company with the amount of detail which they used to do in the past. In the absence of which, availability of a margin of safety in terms of upfront pricing smoothens the deal passage, right? So, which is why you even today there was a mention that Tata Capital has voluntarily reduced their ask by about 5-6% to sweeten the deal for IPO investors, right? So I think at the Tata Capital is at one end of the spectrum, right? Most of the companies are not that big or don't carry the Tata brand name. And of course the business models are also different. So I think valuations have to be attractive enough for the fund managers to be able to invest in a new company without the amount of rigor and the diligence that they would otherwise do in the past, right? It's just physically not possible now.
Yeah, you said it. You have to sweeten the deal.
Yeah.
In your recent interview with Channel News Asia, you spoke about tariffs and eventually the markets reacting to ease in settlement over it. Now, 2 months down the line, do you think positivity prevails?
As of now, we are in a state of limbo. We keep hearing some updates. The recent one last week when our Commerce Minister was in the US, that things are progressing well. But then, we've had some very negative developments like the $100,000 fee on H1B, pharma tariffs, which I think doesn't impact India as much. Though the details are awaited. At least I have not read the details.
Because that is more on regulated and branded medicine.
Absolutely. And we are a generic producer, right? So to that extent, the impact on pharma industry, at least I don't understand it completely yet. We are waiting details. But so it's one positive against something negative. We are still waiting. We've been told that things are progressing. Logically, they should. I think it's just US and India have to figure out a way to get along.
Correct.
So I'm assuming that at some point of time within this financial year, we should be hearing at least some sort of a bilateral trade agreement, and which in all probability will be a positive. I think our competition, the Asian countries are around the 19-20% tariff mark, right? If we can get anything which is below, that will be a significant positive.
Perfect. We all hope that will happen.
Fingers crossed.
So, foreign investors have been both cautious and opportunistic in India this year. What does that mean for entrepreneurs planning to raise capital?
I think, we're good without them. That's, not to discount the value that foreign investors bring on the table, but we've been managing okay without them. I think foreign investors have already sold in the secondary markets over $20 billion in this year, right? First half of this financial year. So they've been net sellers. Even last year they were net sellers. So, the deal activity that we are experiencing is solely on the domestic institutional support. So net FIs, I think of them as a positive upside case, potential upside case, because if they start participating, then the situation actually improves further. If they still choose to stay on the sidelines, so be it. We are managing okay.
They are missing the rally.
Yes and no. So they are. But again, for them, because they have the flexibility of allocating capital in multiple countries, they do a relative assessment of India versus, say, some other Asian markets, China included. And at a given point of time, they may feel that the risk return is better, trade-off is better in some other markets. And that's capitalism, right? So they're free to, take their money out of India into those markets, but then the reverse also happens at some point of time in future.
And as you said, SIP flows are holding up Indian markets.
Absolutely.
For foreseeable future, we should be good.
Yeah. We've seen relatively not so great past 12-15 months, and the SIP flows are still north of 25,000 crores net. Which is a very healthy sign. I think that if that continues, we are good. We don't have to bother about what foreign investors are thinking.
Perfect. So, how are new age themes like sustainability, digital transformation, and AI shaping investment decisions?
So each of these are different. So AI is a large unknown. It's a very, very large unknown, and is it impacting investment decisions? At least I don't have the data to quantify it. IT services, as index has not done well. The H1B, development is actually another negative update there. But that's one segment where the potential disruption because of AI is impacting, prices and investor interest, right? So that's one negative outcome, but by and large, something like AI is supposed to transform the world as we know it. It will definitely have impact on many industries. Will it be positive or negative? I think it's an ongoing thing. Only time will tell. So I don't think that has really impacted deal making, at least in the primary markets, in a major way. Sustainability, I think it's a strong theme, but it's not that there are many companies, have got compelling investor interest just on the sustainability theme. Quite a few renewable energy companies have gotten listed, but they've gotten listed on the sole economics of their business logic and not because of sustainability. Of course, the sustainability angle gives it an additional boost. Digital transformation, of course, that's an ongoing thing. So it's happening in the past. It has happened in the past. It's happening now. It should happen in the future. Again, something which has thrown up new business models. So we had a very successful listing of Urban Company, one of the rare large-sized IPOs which gave a 50% plus, premium on listing day. Right? That's not happening these days.
Yes.
So digital transformation, transforming existing businesses, throwing up new business models, some of which are going ahead and getting listed. That's a major theme, right? And it's been ongoing. It has been happening for the last few years. And there is an existing pipeline, and there will be more in the future, I believe. Okay. So each of the three things, has its own internal set of dynamics.
Ultimately, you have to create value. It could be through any of the things.
Absolutely.
Yeah. The team at Emkay has done some good work across sectors, particularly banking. Can you give us a peek at any recent deal that MK has helped shape up?
So earlier in the calendar year, we raised growth capital for PSU banks. After that, we also raised growth capital for us, for IREDA, which is a specialized renewable focused, another sustainability kind of theme, renewable focused lender, right? So all of these are lenders. PSU banks, of course, we believe that there is a kind of a flip in the value proposition where PSU banks are growing faster than their private sector counterparts, right? There's a huge valuation mismatch, which means that, investors can see strong upsides in near future. So we did a few public sector bank deals, and banking, public sector banking in particular is undergoing major transformation. We are going to have a lesser number of banks. So these public sector banks will merge with each other. From 12, it will come down to probably 4 or 5. And SBI, right? That's outside, which would be another leg of value creation. So the theme stays strong, and which reflected in the the investor interest in the deals that we did earlier this year.
Got it. From your perspective, which Indian business stories have over past years stood out as examples for young leaders?
There are many. It's hard to pick one, but given the advantage of recency, I'll pick up Urban Company. What they've accomplished is phenomenal. I mean, they have created a formal business out of a set of services which are inherently unorganized. Yes. That's the assumption in India.
And they have changed India's habits, I feel, urban India's habits.
Absolutely, and they're getting into tier 3, at least tier 2, tier 3 towns going forward, right? But I think one impact of Urban Company which probably is not appreciated enough is how much they have contributed to, large scale employment creation, formal employment creation, large scale, improvement in actual wages, and also gender equality. I mean, there's so many, part-time job opportunities that platforms like Urban Company, but Urban Company in particular has provided, female blue-collar workforce who are also caregivers at home to be able to juggle their personal and their professional lives and have some sort of a career. I think that's phenomenal. It's a very tough business. I think there were a dozen plus similar business models a decade back. To the best of my understanding, Urban Company is the only one at that scale which has survived and now thriving. It's profitable. They priced the deal well. It listed very well. So, a lot of positives that young entrepreneurs can look at.
Indeed, insightful takeaways from discussion today. Thank you so much for being with us. Thank you for watching, everyone. For more exciting action from the markets, do join us again. Don't forget to watch, like, comment and share. Bullish always. Thanks.